This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your free TF Metals Report podcast highlights for the week of September 13th, 2021, a week that began calmly enough with the precious metals up a little bit, though gold was being obviously capped at its 50-day moving average. We'd seen this happen back in August, and it was followed by a smash. Well, we know what happened by the time we got to the end of the week, but back on September the 13th, we knew this was going to be the focus of the gold trade this week, and that was one of our primary topics of discussion in our daily podcast. So clearly, 1800 is your cap line. Like I said, not only psychologically, but look at the chart below that. That's also where the 50-day moving average is, $1,800.30. Remember that dollar chart I just showed you, the last 4 days? Dollar trying to kind of oscillate back and forth, not deciding if it wants to be above or below its 50-day. Look at the last 4 days in gold, like I just showed you. $1,800 and the 50-day solid cap, just like we had back in July. Couldn't get above it mid-July, couldn't get it late July, couldn't get above it on August the 4th before chlamydia spoke, and then we crashed. Got above it. We were battling it a couple of weeks ago, finally got above it on the FOMC minute day a couple weeks ago. The massive smash last Tuesday, just as it looked like we were getting ready to break out after the BLSBS. And again, with the dollar up only 50 cents, with rates up only 2 basis points, we've been totally smashed back from breaking out and held under the 50-day. Total 100% price manipulation by the banks. Tuesday the 14th brought a little bit of hope. A pop in price of about $13 in COMEX gold that actually got it above its 50-day moving average. We noticed how similar this looked to the last time price had finally popped above the 50-day. And actually got a little bit optimistic. Of course, by the end of the week, that optimism was crushed like it has been on so many other occasions this year. But again, on Tuesday, things didn't look half bad. Okay, I mentioned on the gold chart how we're above the 50-day moving average. Again, fought for 4 consecutive days all the way into this morning. Capped at 1,800, and the 50-day, which you see today, is $1,800.70. This period here reminds me, though, a lot of what we saw back in the middle of August. That's why I draw this kind of loop here with the arrows. Coming out of that August 8th smash and the recovery and getting back and actually having a green candle that week, then you've got pretty much 5 days beginning on August, whatever that is, I don't know, 13th. And you go sideways for 5 days in a real tight range between 1780 and maybe 1795. You see that? Just real tight. Going sideways. And then a big green candle that finishes above the 50-day by about the same amount that we finished today. And what preceded today? 4 days in a real tight range between about 1785 and 1800, just like what preceded that green candle back there on August, whatever that is, 23rd. So now we'll see what happens next. Notice what happened in the mid to late August is you fell back down, used the 50-day as support before extending and eventually, running into extreme bank resistance up there at 1836. So maybe we'll extend now and kind of ride this as support into next week. Remember, a week from Wednesday, next FOMC? I don't know. We'll see. I just thought that was an interesting bit of similarity there in the gold chart. On Wednesday the 15th, we noticed something interesting on the chart of the GDX, the major gold miner ETF. And the similarity of the pattern and even the timing of the pattern and some of the technical features, those really start obvious similarities once you notice them to March. So that made us kind of optimistic. You can hear it in my voice. Of course, we know what happened on Thursday and what happened on Friday. But on Wednesday, this at least caught our attention. Now, this is interesting. The GDX, your next to last chart, check this out. Okay, you know how important that 31 to 3150 area is long-term for support, right? Because it was long-term, multi years of resistance. See the two areas I've circled here? Okay. Notice how almost identical they are. I mean, like I mean, seriously. In February, you're falling down below the 50-day. Price kind of bangs around in late February in this 32 to 33 area. And then collapses down to that important area around 31, 31.50. Rallies, spends 3 or 4 days unable to get above the 50-day. Falls back to about 32. And then with a turn the dollar at the end of March, goes from 32 to 40 in 2 months. Okay, 25%. Look what's going on currently. Early August, falling down, finding some support around 32. Plunging out down, bottoming out near that 31, 31.50 area. Rallying back, failing not on 4 days, but just one to get above the 50-day. And now falling back and stabilizing once again near 32. Almost identical. So what we need to see now is what we saw at the end of March. A rally that gets above the 50-day and stays there. Thursday, September 16th, brought another massive smash in the COMEX precious metals, with gold down another $38. Just as last week, gold was trying to get above and hold above its 200-day moving average. As noted this week, gold was trying to get above and hang above its 50-day moving average, where gold was smashed for $40 back on September the 7th, driving it away from the 200-day. It was smashed for $38 on Thursday the 16th. Now we are firmly in a downtrend again, and with the Fed coming in next week with their next FOMC, we'll just have to see if support can hold. For now, though, we are in a severely enforced downtrend, as you see on the chart. If you just go back to the election of Joe Biden in the U.S., the 1st of November last year, there are now 16 massive red daily candles with drops of more than $30. That's almost 2 per month. It's impossible to keep an uptrend if you're going to have 1 or 2 massive down days every month. Oh, yeah, there's some green candles too, but all of them occurring in a upswing, bounce, counter trend rally. All of the massive red candles have come in while gold is being beaten backwards or capped at a certain level, capped to prevent a higher high like we saw 2 weeks ago. Clearly, the downtrend is being enforced, and for now, it just is what it is. Next week brings the September FOMC. We're going to have to test probably some very important support, not only in gold but also in silver near $22, and we'll just see how it goes. Come back next week for your next TF Metals Report podcast update. But for now, hang in there, and we'll talk to you again next week.